This is Justin Pulitzer. This is my weekend review video for Sunday, January 8th, 2017. Can't believe we're already into 2017, but we are nonetheless. Anyhow, I'm going to discuss a few things that I'm seeing in the market that should be of some interest. I'm going to start out with the 7 market keys. Then I'm going to talk about some of the stuff that got us here, where we are. Some of the things I was seeing in the market that was showing me strength when I think a lot of people were very bearish. Get into the major market indices, some of the key levels there, and then talk about some of the momentum stocks and such. So let's kick it off with the VIX. Clearly at the lower end of the range here. Purely directional mode. A lot of people have been talking to me. They want to buy these levered ETFs and so on and so forth, or calls in the VIX. It's not really the way to do it. Those levered ETFs don't tend to work. Usually they work intraday, there's rebalancing, and they just don't seem to work as advertised. I don't like buying premium in the VIX because you really need an outsized move to kind of make money on it. Like in a situation like this, you'd have made, the flash crash, you'd have made a lot of money in the VIX options. But in situations like this, it tends to be priced in. I much rather prefer playing market indices, via SPY, IWM, or the Qs directly with calls or puts. I just find that works better. So when you get to the lower end of the range, you're probably better off playing it that way. At least that's been my experience. Anyhow, VIX, like I said, purely into the lower end of the range. The 200 MA has been sort of the stall point. When there have been closes above the 200 MA, there's tend to be acceptance and moves higher. Even here, you can see it was short-lived, but there was a move higher. The one time it sort of failed was here. You closed above, had a bit of a look below, and then a move above. So you still had your chance to kind of get your money off if you had tried playing the short. So we've been kind of playing this game here of low volatility for a while. Eventually this is going to lead to some kind of an expansion higher, but we are making lower highs, although higher highs in this sort of sense, but lower highs in an absolute sense. So down here, I'm a little more cautious. Like I said, I don't love the market as much. And I saw some signs on Friday of some things to maybe pay a little attention to and be cautious of. Anyway, we're on the dollar watch. That's really the big potential fly in the ointment. And I'll tell you, I'll make the bull and the bear case for the dollar. The bull case, meaning a high dollar and the market still going higher. We all know that the high dollar is a drag on S&P earnings. But some of the offset is that foreign investors, people who bring their money into the United States, not only make money in the indices, but they have currency exposure, de facto currency exposure, and then they make money on the currency. So if you have a currency in free fall and you're making money in the market, it's not as good when you repatriate it to your own country. It does, however, get more exciting if the currency that you're speculating in happens to rise. So the bad news is that S&P earnings, companies that I guess do business overseas, and Facebook has mentioned this before when they've had some of struggles in their past earnings, that the dollar is a culprit. So we had a bit of a look above and fail in terms of range. Weekday followed by a trend snap, followed by a kind of decent up day, and we're back up over the breakout. So what now? Sort of the Ving Rhames what now, right, from Pulp Fiction. You have a 2-day move here, one of which was a snap of trend. If we were to get back up over the 2-day high, I think we would probably sail back up. To me, this would have been a look below and fail. Any acceptance below these 2 days, I think we at the very least see the 50 MA and potentially lower. This was the kind of the breakout reference highs in here. and you have this reference low plus the backside of the channel. So I think this area will probably be some decent support. This to me looks more like a liquidation break. I don't necessarily know that we have a pattern shift just yet. If we started losing the 50 MA, then I would start thinking maybe the dollar is sort of in the mood for a larger pullback, maybe to the 100 MA. You can see these MAs have been very critical in the dollar. So right now I'm targeting the 50. If we were to lose the 2-day low, and then if we were to lose the 50 MA, then I think we could come down to the 100. It would be just peachy if it tied in to like this reference low by the time we got there. In UUP terms, which is the dollar ETF, let me zoom in here. I'm starting to get a little bit better at this, right? We are above you had this breakdown, and you're above the high. So I will say this: being below the 20 MA to me is a little iffy. Being out of this trend is iffy, but 50 MA is kind of quickly approaching. I would actually love to see something of a larger pullback in the dollar to retest kind of the breakout here, which was, my reference kind of range high. But we'll see how that plays out. So dollar to me, I go basically more on the DX. Anything above those 2-day highs, though, I like long. And like I said, below the 2-day low, I'm a little bit more inclined for the short trade. The bonds. So these were starting to perk up pretty aggressively. Stopped just short of the 50 MA, which is, to me, a little bit disappointing because I have been playing the bonds long. I had gotten long down here, talked about the ad aggressively here, and it's moved up. We are still within the this candle's range, but I think if we were to lose the low of day here, I think that there's risk of a pullback to retest the breakout of the Fed day range, which, look, coincides with this 10-day MA. So that's what I'm thinking. I think that this area, this sort of breakout and reference area, could be some support. And look what that would start to do. Maybe form like an inverse head and shoulders down here. So we got close to kind of one of my first target, which was the 123.15. I eventually think we are going to get to this gap to at least test the start of it. Maybe even get the gap fill. Look, that's a 50% fib, and the test is the 38.2. And that's also the back side of the old down channel. So maybe we kind of work our way up there. I don't know. I heard some Fed talk. Charlie Evans was talking on Friday with Steve Leisman on CNBC. And Leisman asked him where he thought what he was thinking in terms of rate hikes, because he's coming on as a voting member. And his initial discussion, he said, was he thought 2 hikes, but wouldn't rule out 3. So I think what the Fed is doing here, because the market had expected 2 hikes, and the Fed told us that they kind of got more hawkish. They said that they were considering 3. When companies report earnings, they often practice something called UPOD, under promise and over deliver. I think this is the instance of the Fed over promising and they're going to under deliver. I think 2 hikes are probably a done deal this year, unless we see something, really fall out of bed in the economy. But I think that they're doing the opposite of UPOD. The overpromise and underdeliver would make a heck of a lot of sense to me, and that's what I think the Fed is doing. Often they'll lower their GDP forecast. Like, this is a pattern, by the way, with the Fed. They'll often lower their GDP forecasts, and then they'll raise them again like a couple of days after, so that it kind of doesn't spook the market as much. This just seems to be their pattern. Look where I drew this this backside test. It's much further out. Maybe we chop and dribble there. I don't know. We'll see. So that's just my thoughts on the with the bonds. So that this Thursday range, this big kind of body bar, is going to be a key proxy. It would not be pretty if we lose the low there. I think you can kind of use that something below there as a stop, and then maybe if you want to try again, or if you miss this trade, retest of the 10-day and the above the Fed day range. Fed day range is going to get a lot of play in this video, by the way, so just buckle up. the high yield situation. All right, so we could get rid of some of these drawings. We broke the trend here. We had a double top. Let me zoom in a little more. You had a big emotional down day here, and then we've just kind of been retracing. I think we could see the backside here potentially. Like, people won't realize that we kind of came up from the bottom. They'll get all geeked up after we come up over the high, and then maybe stall on the backside of that bar. I'm going to turn that into a regression type of bar. When I use these like blue kind of dotted lines, that's usually what that means. So that's what I'm thinking. But as long as we're above this day's high, this 86.84, and the 10-day, I think we are likely to see higher, which is good. That means that there's no real credit risk. I had talked about this being an inverse head and shoulders. This was the check back, and now we're above it. I mean, nothing too bearish in this pattern. I don't really get worried about credit risk, I mean, like macro problems, until we start getting below 200 MA. You can see it's been very hard to sustain under there. We couldn't. I'll show you back for a while. Look here. Looky here. When we finally broke down below the 200 MA here, we couldn't get back up above it for a long time. You can see tests here. Finally here we got over it, and now price has been uncomfortable below it, and it's bent up. So this to me says that the corporate credit situation is likely getting better. What was happening here? This was when oil was falling apart. Oil has been holding quite steady. You can see we broke a longer term downtrend, looked in, didn't get comfortable. Here was a backside test, again a look in that wasn't comfortable, and we're back outside. So I don't really trade HYG all that often, although I did aggressively trade it in here quite a bit just because of some things I was noticing. Remember when we talked about the snap here of the 50? I mentioned it being a short. I wound up saying that this area, the gap fill, was a cover, and then talked about putting it out again here at this gap fill and then covering again down close to the 200 MA. Yeah, I mean, this was one sweet trade. And I had talked about it. If you want to watch in some past videos, I had discussed some put activity that had me bearish in it. Anyway, you're above all the major market moving averages, the key ones, and until you start breaking some of these, I don't really want to talk about the short setup there just yet. Oil, wow, this has been a wild ride. You have a bit of an inverse head and shoulders here, and you have a neckline that has now touched multiple times, and we're kind of just dribbling above it. So what now with oil? Alrighty. So we had a big emotion day here, a big day's range. I like being short below the low, which is below 52.11, and I think 52s are key. If we were to, like, this was a head and shoulders, and this is a failed head and shoulders. So anything above this is still bullish. Below it, to me, gets more iffy. So we'll keep it that simple. We're still with inside range. There was a big inventory number that I got people kind of, I don't know, this thing was like all over the place. But we're back up near these 54s. I don't expect, look, you have a lot of days of consolidation here. This to me was a look above and fail, but it came down to the breakout, and now it's kind of back up. So if you were to take this high, this 55.24, I think you'd catch a lot of people looking, so to speak, if you're a baseball fan. This would easily see 56s and potentially even 62s for some type of range extension higher. If you lose the low here, then I think we're coming back to the 50 MA, and probably with the quickness, as they say. Some cautionary tales in oil. So XLE, I talked about this looking bullish. This was in a consolidation funnel. It broke out. Now you're kind of just chilling, chillaxing. 50 MA is moving up. It's probably going to be close to this sort of range low. If you lose the 75.08, I like for a quick short, maybe down to the 50 MA and a backside test of the consolidation funnel. We broke out. Often there's a check back and then a go. So that's what I'm thinking. Some of the things that I'm not... and if we get above this sort of this high here, this 76.81, then I think we're going to go back up. If you could get over this double top, then I think we're headed to 81s. Exxon. The curious case of Exxon Mobile. I've been bullish on the stock, but I said I thought we were going to pull back into 87s to 89s and get a 200 or 50 MA test, which we did. We didn't quite get the 50, but we did get the 200. Look here. The 200 was very key. When we gapped below it, it became resistance here for a while. Moves above it weren't sustainable. Finally, we're back above it. It should be support now. So you have a lot of big levels below here. The 61.8 is 86.75. It's also this sort of range low. You have a gap fill at about 85.90. So into this area, I like the idea of selling out of the money puts, probably 85 strikes and below. I think this region is sort of going to be what this area was before, like the 83s, 84s. Look at all this consolidation here around the 87, all these moves, and finally we got through it, and now we're checking back. So this area here should be some solid support in the Exxon. So above Friday's high, 88.98, is a right or right out long. Just putting that forth. China. The China, right? Definitely getting a little better with the new chart settings. So we're back over the 200 MA. I'll keep it real simple. Moves over the 200 MA here were hard to sustain. If you get back below it, it's a quick right or right out short. That simple. Anything above the 200 MA, I'd rather be flat or long. The 50 MA here has kind of been like the new 200 MA, so I'm not really all that excited, and it's downward sloping until we're back over the 50 with regard to China. The BABA. I talked about this trade in, I think, was last weekend's video. I said that this area was very key, and I thought if we held it, it was still kind of okay. Anything below there, I thought we could drift down. But I talked about the 200 MA, and I talked about a right or right out long on a move over the 200 MA. And you got it. This broke the 10-day. You got over the 200, and this sucker just ripped. So you're over a last high. We have an issue, though. We have lower lows, and now we're starting to make higher highs. So you need to make a higher low, really, and then a higher high before the pattern starts to really take off. But I like that we're through the downtrend, and I like that we're over and now holding the 50 and back in the channel. So what does that mean? All right, so above the 2-day high, I think at the very least we see the 100 MA. Look, this was very key resistance here. We could probably retest it. I think the stock, though, could probably see $100 again, 98.45 to 100. So as long as we hold the 50 MA, I'm hunky-dory with being long. If we were to lose that 50 MA, I think it's a right or right out short for at the very least a gap fill or potentially even a 200 MA test again. So Friday's range is key. I like it long above and short below. The IBB, I think, is getting some allocation. I'll tell you, this whole week, to me, was an allocation week for the new year. A lot of push and pull with people trying to short or really book profits, I think, from last year. I think it wasn't necessarily so much shorting. I want to revise that statement. I think it was more people, the fighting of profit-taking versus new money flow allocation. And this week, at least, the new money flow allocation definitely won out. This held some key levels. You're back above the 200 MA. That was the resistance. A kind of a check back hold. Now over the 100 MA. So I'm kind of cool with trying to be long as we're over the 100 MA. If you lose the 100 MA, I think we get a retest of the 200. But as long as these two MAs hold, I'd rather probably be more long than short here, at least at this point. Back below this thing, like if we were to go back below this, it would be I think, really very not pretty. So that's my play on that. Gilead. I can't even tell you how many people, including myself, have been really waiting for this thing to kind of bottom to try to get long. I was looking for a little lower, actually, but we are now into some resistance. Look, the 100 MA has been kind of grim death. So I think a pullback into like this 50 MA area, 50 and like 10 and 20 confluence, is a right or right out long for a test. It's roughly about half back of this range. If we were to like come back for like another couple of days and put in another big bar, you could just buy stop it up over these 3-day highs, anything above 76.98, and I think we would probably see the downtrend close to the 200 and this reference low up near 81s. So a few more like another couple of days. That's also a really famous bullish pattern, like a big move up, 3 down, and then a big move higher. 100 MA is really key, though. I think if you had it from the lows, it's a good idea to trim and trail, and then just buy stop it back over 76.98. Keep it simple. So what got us here? A lot of people were very bearish in the market, and the market wasn't cooperating right away. But I said that this here was not a bear market. Strength in the transports. I talked about a big inverse head and shoulders pattern and then a mini inverse head and shoulders within the bigger pattern. And once we started getting above this 145, I was like, what are these bears talking about? And then, of course, the rest is history. I want to show you something, and I had discussed this in an older video. And I think I actually kind of called the top in IYT here at this channel high. You might be saying, what kind of channel? We spend so much time above there. Check this out. On a multi-year weekly. See this? I mean, if you drew from here, you did spend a little time outside. Here, you clearly spent time outside. But we got back up. It was like come up from the bottom above the high to the channel high. That to me was a natural sell. And I don't think a lot of people were paying attention to that, but I don't know. I'm at this stuff night and day. Truth be told, I'm recording this at like midnight on Saturday night because it's so wintry and cold out. So I don't know too many other people doing that, but I am. So we're starting to break the downtrend here, the channel. The 10-day MA here was a lot of support, and now it's started becoming resistance. So you have a double top here at 64.5, 64.51. Above those tops, this could probably start, levitating again. So people are saying, what are you talking about? We hit the top of the channel, we're going to come back down quick to the lower end of the channel. I don't think it's going to be that easy. I'm going to show you why. The last time, and we need a longer term chart, the last time this topped with this similar pattern, let me zoom in here. Look at what a mess this was. Holy moly. There was a lot of up and down chop. And then once we definitively broke the 50 MA with a lower low and a lower low, and the 50 MA started becoming resistance, that's when the proverbial you-know-what hit the fan. So let's go into modern time. In that last one, there was a press below the 50 MA the first time, but it wound up being a buy for a rally back up to a lower high. So we haven't even had a 50 MA test for the first time. So any move to the 50 or below the 50, I like initially as a right or right out put sale for 100 MA puts. Look at this. Look at all this support. Hold on. Support here. Support kind of here. We came below it, but look, once we got back above it, we kind of have not been comfortable with moves below the 100 MA. And that's on the primary trend of this move. It's hugging there. So I think near the 50 or a press below the 50, you can sell puts at or below the 100 MA, near dated with some certainty that it will do well. I don't love that we're below the 20. Anything to me below the 20, I've said, is put the 50 in play. Anything below the 50, of course, puts the 100 MA in play. So yeah, I like I said, I think this is going to be a real chop fest in the transports. JJC Copper, Dr. Copper, if you will. It's Dr. Copper to you, buddy. This was a breakout in copper that I don't think a lot of people were paying attention to. I was watching this coming up, and yeah, that's not a bear market. That's not an economy that's falling apart. We're pulled back. We're actually above the downtrend, but not really, and above the 10-day. So you have 3 days of consolidation here. If you get above the 3 days, I think we're going to go higher, at the very least, maybe to 30. What was the high here? 30.28. Below this, if you can get below the 50 and this kind of consolidation low in the 28s, there could be a pullback to retest the breakout in the 26 area. And you have 25.59 as the 61.8 of the entire range. Look where the breakout is, though. It's at the 50% fib. I will be starting to lay in to buy copper, both at the 50 and the 61.8. Maybe via short out of the money puts, maybe just via JJC. We'll see. I could even sell at the money puts, or maybe just buy the damn stock, right? So that's my story. You could also see the 200 MA is here. I like that these big MAs, which are, kind of bellwether moving averages, are into these fib areas. So if there were to be some kind of a quick break of this range, I think you could short it for a quick move down to here, but then reverse. Could even do put spreads or put ratios or whatever, but I do think that JJC could be in pullback mode, but I am looking more to buy the dip than I am to sell the rip at this point. XLF. The financials have been on fire. These things are just bull flagging up here, boss status, right? 50 MA is coming up. You're going to notice I talk a lot about the 50 with all the financial names. I think that that's an important moving average for traders. There's a gap fill down here. It's close to the 50. This could kind of come back a lot and be, I don't know, still sort of okay. It's really run a lot. I think that this is going to be good later on in the year when the Fed starts really maybe hiking again. I'm a buyer of pullbacks. I just think that this ran a lot and we're working off some excess. You could see the 20 and the 10 are back up here and the 50 is kind of below. I like the idea of either buying the 50 for a day trade that could become a swing if it holds, or selling near dated out of the money puts, because I do think that 50 MAs in these haven't been tested in a while, and I think that they will be buys. Let's not screw around here and let's talk directly about SPY. So we broke the downtrend. We've had multiple days up. We're back up above the 20 and the 10-day MA. Hard to be too bearish, right? Yeah. So I have a couple of grievances with the market, and I'll talk about them briefly here. And I'm by no means really very bearish here. I'm sort of more neutral here at this point. Neutral to cautious. You have a uptrend that was broken. There was a pullback to the next fib, and now we're back up over the area where we kind of stalled, and we're potentially either making a lower high or we may float up again to the channel high. Remember, I talked about a measured move. It's roughly near where the channel high is. We did something like this, remember, and then got back up to the channel high, and we just kind of ground for a while. I think we could be in store for something like that. If we were to lose this like 3-day low, and look, this was the breakout bar here, if the 3 days, and this was the low, this 225.61. By the way, as long as the market holds 225s, it's okay. Below it is more iffy. And I think if you lose this low, we would easily come back down and retest this low and potentially the 50 MA wherever that may be. So this 3-day low is very key. As long as we're above it, don't short. If we get below it, I think it's a short. That's just my view with SPY. SPX, the cash, which did not go ex-dividend, was what was the high here? We already know that. What am I talking about? 227.753. The close was 226.7698. So a mini bit of a look above and fell, although it didn't really fail very dramatically. So what does this mean for us? It means that Friday's range is very key. That we have the 10 and the 20-day right below here. I think that you could use, the 3-day range rule, but if you want to be a really quick, kind of the quick and the dead, you could use Friday's range as a gauge. If we're above the high, I think we're going to go to the channel high. Below the low, you could try a right or right out entry, particularly if we were to snap this 10 and 20-day moving average confluence. This, to me, was the trouble on Friday. This is my war room, so to speak. You have the S&P futures on the 15-minute, on the 5-minute. You have the breadth for the night for the New York Stock Exchange, and I do have the NASDAQ in there as well in the absolute terms. This is the graphical depiction, but these are the ratios. This is the advanced decline line for the New York Stock Exchange. Here are the ticks on the New York Stock Exchange, the ticks on the NASDAQ, and the VIX. So VIX closed below range. Good. The high tick on the day here stopped just shy of 1,000. Interesting, because the Dow stopped just shy of 20,000. You had mixed breadth. NASDAQ was a little bit stronger. I'm going to talk about that being something of importance in a little bit. But I want to show you something. This 1,000 tick was at 11:45 a.m. That was this bar here. That wasn't the high of the day. It was, however, a look above the Fed day range, pulled back a bit, and then we continued on. The ticks did not continue. They dribbled lower. They even dribbled lower in the NASDAQ. The AD line kind of just melted away all day. The breadth wasn't all that great. This was, the NYSE being weak was probably why the Dow couldn't get her done. So we had a rather dramatic, this was the look below and fail, by the way, the bottom of the range. Remember the Fed day range, the 2.243 is the low, the check back, the failure, and then we've rallied up. This was the Fed day high, and we closed Friday a little bit below it after putting in a poor high. Often I talk about the poor high, particularly with weak breadth. If there was like 5 or 8 to 1, I think we would have repaired it on the close. But we didn't. We had very weak breadth, and it was sort of like one of these junky kind of days. I mean, the market wound up closing up a decent amount. It had been up a heck of a lot more at the high of day, but there wasn't really a lot to it. Why was the market up so much? I think that this was just a pure short squeeze, maybe. The internals, like I said, were weak, and there was very low volume. You could kind of blow the market around. It's sort of the paper cup theory. Look how begrudging it was for the VWAP. This is the weighted average, the volume weighted average price. Just kind of slowly ground up, even with all this time spent up here. So yeah, I mean, we closed above the VWAP, which is, I guess, constructive on the day. There was a little selling into the bell, and that is very typical, so I don't know what to make of this close below the Fed day high. Was it a look above and fail, or will we get back up there on Monday? So this wasn't a very large liquidation break. I'll tell you, if the Sunday futures open up and they're not up, I think that we may want to drift lower. At the very least, maybe to the Fed Day VWAP, which is close to the 38.2. I don't really use 38.2 as a important level, but the 61.8, there's a lot of issue, a lot of reference support down there. The January gap high, the Fed Day low. You have the Fed Day VWAP, which is roughly at the low of day from this day on Friday. So if we were this, I just want to show you one thing. I had talked about this at the time. I said that this was a look below and fail once we got back up above the Fed Day high. The Fed Day low. Look at this. We have these poor lows. Carry that forward, I said, that I thought we would go higher once we got up over the over these highs and over the Fed Day VWAP. So this was a look below and fail. And when you have a look below and fail, you tend to rotate to the high of the range, which was the Fed Day high. And I talked about this area. I said, if you were in this trade, this is the time to book it because you rotated all the way from the low end of range to the high. And if we didn't accept above, I thought that there was a risk for a pullback. So now, was this a look above and fail, and are we going to rotate all the way back down to the lower end of range? I can't tell you, but I can tell you this, that it is a high probability. It's very highly probable. So, like I said, if we open up weak and we're weak on Monday, I think that there will be a pullback at the very least to the Fed to the VWAP, the Fed Day VWAP, potentially to some of these fibs. I don't know if it's going to just be the halfback or the 61.8 or if we get the full 100% retracement. Like I said, we have poor lows here that were not repaired. So it's very possible that there's a larger liquidation break to repair those lows. That being said, Friday had poor highs. Markets don't really tend to top or bottom on Fridays, just like I said top or bottom. So even if there is a pullback, I don't really expect this to be kind of the end of the move, but I don't know. We could have a very large, there's often a large liquidation break before a repair. It could be a small one, it could be a large one. Maybe it was just people taking profits into the weekend. We had a big run this week. The market was up a lot, and maybe there was just some profit taking. I can't tell you. This is just a little bit below here, and you can see even in the last kind of 15 minutes we were trying to get above it. I think it's a little constructive that we did close above VWAP of the day, which means that most people weren't really wrong, but there wasn't a lot of volume here, and I really want to see how that goes. So if Monday is a gap down and you can't get above the first 15-minute high and you take out the 15-minute low, I think it's an entry right or right out short. If we are strong in the futures on Sunday night, I want to see if we can get over the overnight high, regular trading hours early on Monday morning. If you have a high that isn't higher, then there could be the pullback on that. If you do get over that overnight high on Monday, then I do think we're going to be off to the races, move to the upside. So those are the scenarios that I'm watching to play out. So the SPY expected move this week is about $2.25. I would think since we're so low in the end of the range in terms of the VIX, that that would be the kind of the cap to the upside. The move to the downside could be a little bit more dramatic. If it is just the $2.25, that would be $229.46 down to $224.96, which is roughly $225. Anything below the 225s, though, I do think that there could be some acceleration to the downside. So a little bit of caution here, and I can't tell you if this is just rotation or not, or if, IWM, by the way, was one of the factors that really got us where we are. The strength in IWM. This thing has been an absolute monster. We broke out here, didn't get a full check back to the breakout. So at some point I am anticipating this gap fill or even a check back to the breakout, and you can see This is that white bar, the white box that I had talked about for a while. Couple of things. Remember I talked about 134.81 being the multiple bottoms here? We had a break, a look below and fail here, and then a look below and fail here, and then a move early in the week which took out the trend, but then quickly failed below the low, acceptance into the bar, and then we're below this day's low. Anything below 136.01 to me is a little vulnerable. We closed below the 20, we closed below the 10. It's possible. I don't really want to characterize this as really a look above and fail because it wasn't really above the range. It's just above like sort of a sideways channel. But this nonetheless should have been more bullish, and it wasn't. So below the 2-day low, I think is a quick right or right out short, probably to the low end of range again. I don't know if we're just bouncing around in here. Remember I talked about this being frustrating, that it could just be chop. It's done this on multiple occasions. Look at this. That this was impossible to short. I mean, it was just a total jigsaw mess. So we could be in for that again. We came up a lot. We're working off more by time than by price. I will say this, if you start getting below these two lows, the look below and fails, I think that there will be a move down to the 50 MA, which, look, is right roughly where the gap fill is, and you have a channel low roughly where the breakout is. So below these two lows, the 134.40, I like a try, again, another whack at the short. But anything above there, it's sort of just still within balance and range. So this is showing a little bit of weakness. However, and the expected move is $2.16, so 137.85 to the upside, 133.53 to the downside. But I think if the move is to the downside and we take out these lows, there is going to be acceleration down to the 50 MA. Maybe a little bit of an overshoot to the channel low and the breakout, which to me would be the area to cover and to buy the dip. I'd probably, if you want to do it the chicken hawk way, you could sell out of the money puts either 126.85, like around 126s, or 124.03 is the 61.8. This was like a big breakout in the 125, so I'd be cool with anything sub this area, and you have the 100 MA down here, so something in that region I think could be okay. The fly in the ointment for the bear case are actually the NASDAQ, the Qs. This has been a huge laggard for a while, right? The NASDAQ has not been participating. The FANG names, if you will. The FANG names now are starting to participate a bit, and I think they're doing so because of, I'm trying to figure out how I want to draw this channel in. Like this, maybe? Could do this. We are kind of to the channel high, though. So that could be a little issue, but we'll see. Why was FANG participating? Because interest rates came down. Remember PE multiple premiums, when rates go lower, that tends to be where people want to put money. So this is the NASDAQ on Friday made an all-time high. So I think it could be just some of the IWM money rotating back into the NASDAQ. So we're going to keep an eye on that. Expected to move $1.43, so 123.36 on the upside, and then 120.5 on the downside. As long as the 50 MA holds, she's okay. Below then starts getting my attention of being way more iffy. Apple starting to participate. Remember I talked about there being a big buyer. I saw that kind of big buyer go away, and now I see it back. We've spent a lot of time. Look, this was a bit of a regression line I drew in, and look where this sort of started to stumble. So we're getting back close to above those highs. As long as we're above the 10 and hold the 10 and 20, I'm fine with Apple long. Below the 20, where it's supported here, I think we'd see a 50 MA test. If we bust through here, I think we could see this sort of channel high again, up in the 121s, but I want to caution a few things. One, this gap never fully filled. There's a reference high at 123.82, and you have of this range, a 1.272 is up here at 22s. If we get a full 1.618, that's up at the 127s, which start getting into the gap.
But I'm thinking channel high here, somewhere into near this the 122s to 123s, 82-ish area. Maybe it could push to 125, but that area to me seems like it's going to be a little bit of resistance. Apple just never likes to make it easy, but the pattern seems okay. Anything above here, I do think will push up higher. If we were to get back below Friday's low, and this like 10 and 20, this, like I said, could really risk a larger pullback. But I am seeing Apple again. This could just be fund flows. It was weak though early in the week. I think still some hangover from that Nikkei Asia downgrade. Anyone else but me notice that they always do these hit jobs on holiday weekend, Friday holiday weekends? They did it here. It wound up being a disaster. It didn't quite this time, so I think people may have caught on to it. Amazon, this was one I talked about as a row trade on a break up over the 50 MA. It stalled at the 100, and now we're over the 100. So what now? Amazon could see the channel high. That would be the gap fill, right? Close, maybe a little bit push through. If it does that ahead of earnings, I don't know what to tell you. It'll be a big move already. We did already start to get to the start of the gap, which is sort of a range high. I'd be looking to maybe book a little bit of profits here just because we came up so much. I think we could easily go higher, though. So I like the idea. I talked about a synthetic fly, meaning selling the 800 calls and buying 820s. So you at least lock in some of this gain and then play for a smaller percentage upside. I still like that. As long as we're over the 100, though, and for sure over the 50, I'm okay with still being long. The ideal setup here would be a stall here at the gap, go sideways a little bit, and then go, or there to be a stall, a pullback to the 50, which was all that resistance. It should now be support, and then you could row buy it there. So Amazon, though, to me is looking better. I had talked about that looking like it would go higher. I'm noticing a lot of holiday boxes. I don't want to get into that. It's more anecdotal, but they just seem to be cleaning up where, retail blew up this week. Kohl's, Macy's, all that junk is down big. I'll talk about the gap in a minute. 100 MA here in Facebook has been important. Here. We gapped below. It was the resistance. It probably will be again. This is just in a big range. I talked about a quick trade here on the break over this downtrend that I thought we'd see the 200 MA. We did, and this went even further. So, is everything okay? Not yet, actually. It needs to break over this 124.61 on the weekly chart. This is a hammer. This is basically all a hammer, one bar. And over that high, I think we could see the gap fill. There are a lot of people trapped in Facebook who are probably looking to get their money back up here. So I think somewhere between the 128s and the 127s, it probably could be a decent right or right out short, considering you came all the way up from the bottom. I would be looking to book some profits here around the 100 MA. My ideal scenario with this thing to really get weak ahead of their number, but it probably won't. It'll probably rally ahead of the number, and then who knows, maybe it's a short. We'll evaluate that when we get there, but it seems like a good area to take some profits at the 100 MA. Maybe a similar situation with Amazon, sell some near or at the money calls, and then buy some out of the money calls to play a little bit more upside, but still lock in some profits. Google. Also, again, if the market is going to be falling apart, why is Google now making a new high off of higher lows and now higher highs? This should be a chip shot up to the old high and maybe beyond. This closed well. It closed over these highs. If Google, though, were to lose the low of 811.50 on Monday, this is going to go a heck of a lot lower. So be careful with Google. I'm cautiously optimistic on the fact that we are now participating again with FANG. So Friday's range is very key. Above the high, should easily see the old all-time high.
probably even higher because we're coming off of a higher low. But below that low is a GTFO and a right or right out short. Netflix. This has been the strongest of the FANGs. Remember when they reported they were the strongest? This has come back partially into the gap and now up at the old all-time high. It moved a lot. This is actually a mini, I want to say, look above and fail, actually. People had asked me where they were targeting the 133. I think there's just a lot of profit taking. Look how this all came up. So what now with the Netflix? You have a doji, a big one. Below the low, 129.81 is a right or right out short, maybe to the 50 MA. Above the high of 133.88 will continue higher, in my opinion. NVIDIA. I think 94s could be in the cards if this gets weak. We're right on the 20 MA. I talked about it for a bounce trade. Anything that loses this low, 99.38, I think sees the 50 MA. I think on the weekly, it's the 10-day is around 94. This has already kind of had the $100 test. If it loses that, I think we're going to see the 50, which, look, support. It is the backside of the channel. It should probably support again. I would think a 50 MA at the very least is a day trade long. Back up above this high, 106.37. And above the 10-day would probably start, well, we held the 20, so we probably should see the 10. So I think as long as you hold the 20, you could be long. If you clear the 10, then I think it's back to the races. But below the 20 and below this reference low, I think we're seeing the 50 fast. So we'll keep it simple like that. Tesla seems to be repairing. We're back over the 200 MA. This 230 area, though, to 240 has been really grim death. We're coming up from the bottom of the range. I think this area is probably a sell, at least initially. There's an old channel. If the earnings are good, maybe it gets back to 265. I mean, that would be something, right? But I'll keep it real simple. Over the 200, I'm fine with being long. The 10-day seems to have supported here, so as long as we're above the 10-day, it's okay. You have a this is really the big look, 3 or so down and then up. So anything that's above the 228, I'm fine with still being long. If we get back below 221.95, I think it's a decent right or right out short. But really nothing to see in there on the short side unless we really start losing that area. Nike stopped me out. I had been playing short. This got some kind of crazy upgrade. I never got in long, but it did stop out. Anything above the 100 MA to me, though, is still a long. I think that this stock is probably going to see the downtrend at this point. So Nike seems like it's getting some allocations. If we got back below this low, particularly like, let's say, Monday, then I think it could be a right or right out short for the gap fill. So that's my, I think Friday's range is really key there. JPM, same kind of story. I think this thing has got 100 one day written on it. That's the 1.618 fib extension of the entire range. Hugging the 20 MA. If we were to lose the 20 and lose this like double low, 85.04, could see the 50 MA. So could be a right or right out short below 85s. And I would be looking to, at the very least, buy the 50 MA for the first time. Look here, it's been support. It likely will be again. Could sell some out of the bunny puts, maybe against the 100 MA, if there's any juice there. Similar situation probably in Goldman Sachs. Friday, a bit of a look above and fail. 20 MA is key here. If you want to be cute, a loss of Friday's low, which is 241.37. I think you could try a right or right out short, probably to 236s. If you start losing 235.37, this could come down fast to the 50 MA, which will probably be at the very least a day trade long. Bank America, same spiel. This here, however, is in a bit of a downtrend. Depending on how you draw it, I mean, you could have drawn it like this, and you could say that it is above the downtrend. So, let's see.
10-day seems to be where all these hammers are. If you start losing these hammers, these, like, let's say this hammer, because you have double top here, basically. Yeah, so anything below the low of this day, 22.35, I think you could try right or right out short. Above 22.96, this is probably going to start going higher again. We broke the trend and now kind of riding it. This was like a bit of a look above and fail. So the 3-day range, above the highs, it's going higher. Below this day's low, I think we start sinking again. Gap stores. This thing is a total mess. I had actually been playing long. I took it off here. I happen to have a sell order in, and it got one tick above this, which probably triggered it, and then it collapsed, and the next day was a gap down. Then they issued a guidance that they had good kind of sales, right? And it basically opened kind of near the highs and then just closed near the lows. I mean, both days were met with selling. So there's something, in my view, not kosher here. And I tried this long, actually, on this day because I thought this gap up might hold, because this basically got down to my range again, and I had said I was kind of okay with it again. But what I didn't like was that it lost the 200, and then when it bounced to the 200 intraday, I wound up getting out break even, and I wasn't sorry. I had sold some puts, and I wasn't really down very much on them. But I said to myself, we're not seeing good price action. Both gaps have been met with selling. The 200 MA here should have been support, and it was not. And we're still failing on the channel. So if you could get above Friday's high, and these 2-day highs, the 24.93, then I think we're going to go higher. But look, I mean, where? You know, you have the 50 MA now, downward sloping, getting close. You're below the channel. It's in a down channel. It just seems to me really iffy. And I don't know. Maybe this thing does want to come down and see the 19s again. You know, it's very possible. I think that area would be a heck of a lot of support. Definitely decent yield, but until you get it back up above Friday's high, I don't want to know about the gap at that point. MobileEye, one I have hated for forever, I finally turned on, and wow, it did a good job, right? I said that I thought this was a professional gap. I think in last weekend's video, I said a pullback to the 50 would be a buy. We never even got it. But we got above it, and now it's kind of holding above the 41s. I talked about 41s being the target. As long as this holds the 200 MA, look, this was important here. Was really where it broke down here. It couldn't hold. As long as we hold the 200, I'm okay with still being long. But back below, particularly this day, if you lose 40.65, I'll be thinking right or right out short for a pullback, maybe to the 50 MA. Look, this is where it broke down from. This just careened through the 50 MA. I think it will be major support now again, but this to me looks like it's just going to consolidate and probably resolve higher. MobileEye. It seems like I don't know, maybe it's the new NVIDIA, who knows. VIP Shop, not a stock I've ever liked, but I don't even know why. I think I don't know why I looked at this the other day, but I did, and I noticed that the breakdown here was from the 20 MA, and I was noticing this was coming back up over the 20 MA. It had broken this triangle downtrend, and I had bought it this day, and now it worked so far. So maybe the 50 MA is a test. Look where the support was. This was sort of the resistance. 50 MA is roughly filling up this triangle. I might try to hold it for a full gap fill. I don't know, but I have good trade location. As long as the 20 MA holds, I'm fine. If it starts losing the 20 and the 10 again, I'll just stop out and be break even. No biggie. Ameritrade, I'll end on this one. We're close to my target, 47.81. Time to start booking it and then looking for, maybe there's a pullback to the breakout. And then I'd start getting interested in buying it over there. Anyhow, that's my story. I'm sticking to it. And I hope we had a great weekend. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, hit the thumbs up.
And please leave me some comments. Your comments and feedback help me make the videos better. So help me help you. Have a great rest of your weekend, and cheers.